Let's break down what today's market action means for your money. Here's what it actually means for you. When I look at market days like today, I ask, what's actually changed? Not the noise, what should your money care about? Most people get caught up in point swings and forget real moves come from what happens next, not what closed today. I see 3 stories. Tech cooling after a run, bonds weak because Fed rates stay high, and oil finding support from supply concerns. That tells me something about where pressure is building. Here's the honest breakdown. Tech pulled back because we had a 6-week run where AI went vertical. Pullbacks are resets, not crashes. Bonds are stuck because Fed officials say no cuts until next year. Oil's climbing on real supply friction. And cash, treasury bills, pay real money right now, which changes whether you hold stocks or stay dry. That's the actual shift to notice. I think the biggest mistake is treating down days like tests of faith instead of questions. Down days are when you actually act, but smartly. You ask, do I still believe at today's price, or only old prices? Second, look at what you haven't bought. Down markets create the entry prices you waited for. Just don't buy on day 1, wait for the 3rd or 4th reason to buy, not the first impulse. Market action is always forward-looking, never backward. Today was down, but tomorrow's catalysts matter. Earnings come next week. Real numbers replace guesses. Inflation data Thursday tells you if Fed policy looks smart. And the 10-year yield, that's your signal for whether stocks are cheap or getting cheaper. If yields break higher, bonds become competitive and money leaves stocks. That's a shift, not a crash. Here's my honest approach. I don't decide in emotion, I execute on red days. Today I'm updating my watch list with names I like cheaper. I'm not dumping positions down 3%. And I'm not buying just because it's on sale, that's catching falling knives. What I am doing is checking. Do I have 30% in boring treasury bills? When the next scare hits, dry powder keeps you calm instead of forced selling good stuff. I want to bring this home because market days get blown up into drama that doesn't belong in your life. You didn't get hurt today. Nothing fundamental broke. Some over-leveraged traders got shock and it got reported as crisis. For you, someone with a 3-year-plus horizon, today's a reminder. Portfolios go up and down, and that's fine. Real wealth comes from staying the course, adding to winners, and not panic selling on bad days. Your real edge isn't beating markets on any one day. It's staying patient while others freak out. That's the read. Keep it simple, react to the data, and join the free Discord at Discord. GG/R47RZGM.